Alright, so you want to own a private jet. Or at the very least, you want to know what actually happens after you wire the money and take ownership. First of all, a modern business jet can cost anywhere from $5 million, $50 million to even $150 million. That's more than a commercial airliner. It's more than the GDP of some small island nations. But here's the strange part. The company operating the jet usually doesn't own it, and more importantly, how does owning a $150 million flying asset actually make you money? Because in aviation, ownership is a completely different business than operation, and it's far riskier than it looks. When people hear private jet, they imagine leather seats and champagne. But a modern business jet is essentially a flying, self-sustaining industrial machine. It consists of 50,000 plus pounds of specialized aluminum welded into a fuselage designed to withstand 40,000 feet of atmospheric pressure without cracking. Twin turbofan engines capable of producing 30,000 horsepower, all built for an expected operational life of 25 to 30 years. Take a large jet ordered from a major manufacturer like Bombardier, Gulfstream, or Airbus. But the prices are not random. It all depends on the price of materials at that time, the type of engines you want in the jet, and the capacity of the factory you want your jet built. And then there's global demand for private aviation, the ultimate wild card. Jet prices don't behave like real estate. They behave like volatile stocks. When aviation booms, prices surge. During downturns, they collapse dramatically. For example, during the economic crisis of 2008, some jet values dropped more than 40% in a single year. Jets that cost $50 million to build were suddenly worth $30 million before they even took their first flight, simply because demand had dropped. In private aviation, there are three main players: the manufacturers, the operators, and the owner. And almost always they're completely separate companies. For example, a global charter company like NetJets, VistaJet, or Wheels Up operates thousands of jets. You see their logos painted on the fuselage, but they do not own all of those jets. In fact, many operators prefer to own as few as possible. Many are simply chartered. So who holds the deed to that $150 million piece of aluminum? It might be a billionaire family office. Families in Europe and the Middle East control roughly 30% of the world's entire private jet fleet. It is a multi-generational art form of buying low and selling high. It could be a fractional ownership fund where everyday citizens pool their money to buy a single jet for tax benefits, or a Japanese leasing company, massive financial conglomerates that buy jets purely as depreciation assets on their balance, or even a private equity firm operating out of a sleek office in New York or London. These owners don't fly cargo. They don't care about the logistics of getting executives from New York to Dubai. They just rent their jets. Owning a jet is basically a massive high-stakes leasing business. To make your money back, you have to lease it out. There are three main charter types, each with a vastly different risk profile. Number one is the time charter. It is a safe bet. The operator rents the jet for a fixed hourly rate over a specific period. For example, $5,000 per hour for 200 hours per year. Owner provides the jet, maintenance, insurance, and crew. The operator handles fuel and logistics. If rates are high when you sign, you lock in strong guaranteed returns. But if the market surges right after you sign, you're stuck at the old rate. Number two is the fractional ownership model. The operator rents a percentage stake in the jet. They handle absolutely everything from crew to maintenance. For the owner, this is lower income but almost zero involvement. Hand over the keys and wait for the monthly check. Then comes number three, the spot market. Jets are rented flight by flight. Rates swing wildly based on current events, seasonal demand, or sudden geopolitical crises. This is where owners make generational wealth. When COVID-19 hit in 2020, halting commercial aviation, spot rates went parabolic. Jets that usually rented for $8,000 per hour were suddenly commanding $25,000 per hour. Owners became billionaires in a matter of months. But the hangover is brutal. In 2023, as commercial aviation normalized, many of those rates fell by over 60%. How do these owners afford the jets in the first place? Because almost no one pays cash. The typical financial structure is 30% equity and 70% bank financing. Aviation banks provide colossal loans secured by the jet itself. To protect themselves, owners use a legal shield called a special purpose vehicle. If a billionaire owns 50 jets, they do not own them under one massive corporate umbrella. Instead, they create 50 separate shell companies, often registered in Delaware, the Cayman Islands, or Panama. One company, one jet. Why? Because if a jet has an accident or goes bankrupt, the rest of the fleet is safe. There's a massive problem lurking here. Let's say you borrow $70 million to buy a $100 million jet. A year later, the market crashes and the resale value drops to 50 million. You're now underwater on your loan. The collateral is worth less than the debt. Bank panics and demands cash. If you can't pay, they seize the fleet. Aviation history is littered with the corpses of over-leveraged companies. Let's assume you manage the debt perfectly. You still face another enemy, regulation. A jet physically lasts 25 to 30 years, but environmental rules are currently turning the industry upside down. The push to decarbonize means sudden mandates for new fuel systems, engine retrofits, and massive emission scrubbers costing millions per jet. Furthermore, what happens if you build a jet today that runs on jet fuel to find out in 10 years that the global standard is sustainable aviation fuel? Your jet becomes a stranded asset. It's too expensive to run, illegal in certain jurisdictions, and impossible to sell. Its $150 million drops to zero. Owners are constantly gambling on fuel trends, carbon taxes, and geopolitics. Aviation rewards patience and heavily punishes overconfidence. Because of this, jets are traded just like volatile commodities. A jet bought for $150 million might be worth $180 million in a boom because buyers want a jet today, or drop to $90 million in a crash. Some owners don't even intend to operate the jet for its full lifespan. They speculate. Buy low, charter high, sell high. And when a jet finally reaches the end of its 25-year life, it still holds value. It is flown one last time to aircraft boneyards in places like the Mojave Desert or Arizona. There it is dismantled by hand. The owner is paid for the raw scrap weight of the aluminum and avionics. Even in death, a large business jet might yield $5 million in scrap metal, a final absolute floor to the asset's value. So why does this chaotic system work? For an operator like NetJets, owning every jet in their fleet is incredibly capital-intensive and debt-loaded. If global demand slows down, an operator with 500 owned jets still has to pay 500 mortgages, even if they're flying empty. Chartering provides flexibility. If demand drops, the operator simply lets their short-term charters expire and hands the jets back to the owners. The operator stays lean. The owner takes the financial hit. This separation of ownership and operations spreads risk across the global financial system. When an operator goes bankrupt, the jets don't disappear. The owners simply take them back and recharter them to a competitor. The companies may die, but the jet keeps flying. Owning a $150 million jet isn't just renting aluminum. It means managing staggering debt, predicting macroeconomic cycles, betting on environmental regulations, and surviving brutal volatility. But when you multiply that across hundreds of jets, leveraging debt and reading the tides of global aviation, you begin to understand how modern aviation empires are built, not through control of the flights, but through the relentless calculation of risk. So the next time you see a billionaire step off their jet, remember, they're not just flexing wealth. They're managing one of the most complex financial machines on the planet. Understanding this system is understanding how the modern world actually works. If you want to dive deeper into the psychology of wealth, asset management, and knowing when to hold and when to let go, subscribe to the channel and hit the notification bell. New insights into the economics of power drop every single week.